Forgot my microphone here. How's everybody doing? Good to see you. Today, as you saw on the title screen, once I get this thing untangled, I'm going to talk about what if the most recent correction was actually putting stocks at fair value. And fair value is probably a loose term, to be honest with you, but I want to show you. Now we got volume, correct? Can I get a quick yes on the volume? Sorry, guys. All right, my signals say that you can hear me now. Okay, good. So that whole intro, really what I'm coming in here for today is thinking a little bit about fair value for stocks, and also this rabbit hole I went down here in the past 2 or 3 days when I would just sort of noticed a pattern on just about every growth stock out there, as well as some that were mega caps and whatnot, that frankly some of the prices today are astoundingly similar to the price that was available on February 1st of 2021, give or take. So it got me to thinking a little bit on this market meltdown. It's like, hey, did this correction, is it a correction, or did this whole thing start a much longer time ago? Because I feel like the consensus on the news and many other people right now are saying, hey, we had a little bounce back yesterday. I didn't look yet where we are standing right now. But people are like, don't worry about this bounce back. Stocks are going down lower and lower from here. So anyway, that's a conversation topic. We'll look at a few charts. As always, I'll take questions and whatnot. But let's take some of our names and look at where they sit year over year, February 1, 2021 versus February 1, 2022. So shout out to Lion and Umair. Thank you guys for the microphone check. That would have been a long show with no sound. So who else we got? Raj can hear you. Raj can hear me. Thanks, guys, for checking in. So let me show you what I was talking about here real quick. And I'm just going to pick up, I don't know what this one is. This is Datadog. I'm going to show you guys some stocks that, to be fair, I haven't really fully researched, so don't take this as an endorsement for any of them. But here's your 1 year on CrowdStrike, obviously a very popular play. And February 1st of 2021, CrowdStrike was 215. Okay, now we bounced up today and we're up to 181. So I guess the point here on CrowdStrike, which has been running very, very hot for a long time, if you just went on stock price, which is sort of the opposite of what I do on this channel in terms of fundamentals, CrowdStrike right now, cheaper than what you would have bought it for on February 1st last year. And then it took a little bump and then it came back down. So, how much further does a stock without strong fundamentals like CrowdStrike have? How much farther does it have to go? I'm not sure that it has, another 30% downfall in it. Just eyeballing this and thinking about it, off of memory. Let's see who else. I'm going to pick up Visa since it's sitting right in front of me. Huge day today for me, by the way. PayPal earnings. You guys know it means a lot to the old portfolio, especially a portfolio that's gotten beaten up here lately. Visa, February 1st, $200. Okay? Now, you're up today because they just reported earnings, but a couple days ago, $200. Like nearly a 12-month span on Visa. So all the fat here was in the middle. Let's check out PayPal. We won't know which way PayPal slides until later. So today is sort of a weird day to be looking at PayPal, but we'll do it anyway. PayPal, significantly more expensive last year. We'll see where it lands after earnings, but $242. Then it's down to $150. And try to pull this out a little bit. Yeah, that's kind of what I thought. Let me get into Jan 1. So Jan 22, you're at 240. Okay, PayPal doesn't exhibit it as much. You can see that their 1 year sort of runs back into September of 2020. But the illustration is very similar with the huge run-up. You know, just eyeballing it, right? No fundamentals, just eyeballing the chart. Is this the correction, right? Is this the correction? Chopping off this froth right here, which I will be the first person to say PayPal had some froth to chop off. All right? Let's think about another one here. I'm going to look at the charts. We got, how about AMD? The comments is what I wanted to see. Let's look at AMD. They've had an interesting year. AMD last year, $86. They're bumping right now. They got earnings today, but yesterday or a couple days ago, $103. You pull back this chart a little bit, you would have been at 97. So again, AMD very, very close recently to getting back to sort of 1 year off the books, right? They basically erased a year of stock gains, not necessarily fundamental gains, but stock gains right off the charts. Let's look at Facebook. Oh, God, somebody put Smile Direct in there. It's even uglier. All right, so here's Meta. Pulling it out. Year ago-ish. We'll just say that this is a year ago. 274. Before the recent run-up, you're at 295. So maybe this was the fat. You know, fundamentally, I don't think Facebook has a ton of fat, but maybe this was the fat, right? And then from here, what does it mean, you know, going forward? It doesn't mean the stock's going to go up from here. I don't know. I'm just calling out this weird observation, and I'm going to try to type in people's stuff. Let's put Smile Direct in here. I'll tell you which way that chart's going, though, without even looking. That one is called the Avalanche. Come on. Need the autofill. There we go. Good Smile Direct up 10% today. I do not own this anymore, by the way. I have kicked around the idea of the revenge trade, right? Getting in it just for kicks. You have to go pretty far back. They had such a terrible year. This is where I should have but did not sell at 15. And then it's been disaster since then. I don't know what to tell you about Smile Direct. You know, they're closing some unprofitable countries. If we get some sort of crazy shakeup in the market and it goes below $2 again, which I do believe it did, and you want to gamble, you know, there's worse gambles than buying a few hundred shares of this under $2. We'll see we'll see where it goes. I thought about a revenge trade, as I mentioned, but at the end of the day, I just decided that my money was better served in things that were easier, or excuse me, more risk averse than a company going bankrupt. So, all right, let me type in one more. Let's see. see what's on the front page just for fun. Let's see if I can find something going on Seeking Alpha. All right, how about, well, DraftKings, no, they were higher. What about Square? Let's see what they've done over the past year. Square definitely has some fat on it. If you go back to November of 2020, you're at 157. Today, 107, bouncing a little bit up to 126. We'll see where their earnings are. But, the point of this exercise is illustrated right across this line. Was this the fat? Was this the correction? Taking all this out, right? Let's look at Google. I don't think Microsoft and Apple really show the same, but let's take a look. Yeah. So 1 year on Google, who has done basically nothing wrong. 2,500 recently. That only gets you back to summertime. A year ago, this stock was $2,000, maybe even less. 1,900. I would say for very good reason this stock has went up from a fundamentals perspective. So anyway, that's my intro. Was last year the froth? Was last year the give or take from, let's just say, Feb 1, March 1, Feb 1, who cares, all the way through Thanksgiving, was that fake? Was that a fake run-up? And really what we're seeing between Thanksgiving and now was a run down off the froth. And where does that leave us today? I don't know. You guys know that I bought some QQQ during this rundown. I also bought a couple shares of the leverage QQQ. Nothing big, just 3 shares. And that was sort of because it's like, well, wait, what if everybody's wrong? And I don't mind holding the QQQ for 10 years. So, and that's actually doing okay. I am still down in that trade, but it's not as bad as you would think with all the pain out there. All right, let's see what you think on the comments. Lion, retail investors bought the dip, retail investors ran. The opposite happened the week prior. Retail investors sold about 1.3 billion worth, and institutional bought the dip. And I will say on that, retail and institutional, I've been thinking a lot more about that as well. So even though the people maybe in your circle, let's just call it regular people, right? Cash for investing, I'm sure has gone down significantly since where it's at last summer. But typically the market is not super duper concerned about whether I'm going to put my money in the market, right? There's so many bigger players that just because Johnny and Sally and me and everyone on this chat say that they're too broke to invest doesn't mean there isn't money out there to invest. So if I don't like the argument, I guess is what I'm saying, I don't like the argument that interest rates, inflation, blah, 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 suck people's money out and then they can't invest anymore because the people who have the most money, they're not even touched by 0.25% interest rate, by an 8% inflation rate. It doesn't, if you have millions and millions of dollars and you're capable of moving the market, I'm not saying 8% inflation is good, but if your gallon of milk goes from $3 to $3.30 and you have $1 million in the bank account, I'm not sure that it changes a whole lot of what you do, right? If you spend $300 at the grocery store every week, now you spend $330, $340, and you have $1 million, do you even notice? I don't know. And those are the kind of people that move this market, not me and my freaking $500 that I throw at certain things, right? So keep that in mind. The pain in our lives being lower on the food chain is not the same pain that other people go through. All right, Allie, how you doing? Derek's here. We're here. Found a new stock, Dell. Long-term debt of 50 billion, market cap of 43 billion. I don't even know. Let's take a look. So throw it in here. I haven't looked in Dell in a while. I got a good video tonight that I think even Derek would potentially approve. I threw in some free cash flow metrics for him because I know that world is getting more and more popular. I'm not averse to my PE calculations. It's something that I know. But if you're going to rag on PE, some people will call out, and Derek has called this out to me before, that, EPS can be manipulated. You can move things around to hit your EPS number. In the case of what I do, I look at PEs and I try to look at debt and make sure that it's not an overwhelming amount of debt that the company couldn't pay for. But on tonight's video, which will give you 5 stock ideas that I don't think, there's only one that you've ever heard out of me, I believe. One of the 5. I factored in free cash flow just for you, Derek, wherever you are. Now he brings up Dell, and I'm going to go down here. Found a new, way down here on the stock charts on SeekingAlpha, which, by the way, if you're interested, SeekingAlpha, my affiliate link is in the description, offers a significant discount on a 1-year subscription to what is a very good platform. Okay, so earnings estimates for Dell 2022, so they are in this year already. Projection anyway is down. Then it goes back up. Sales of 100 billion. Looks like sales plus 7-ish%. You've got non-GAAP forward PE of 869. PE gap looking backwards 656. Cash flow year over year is been up 15%. Profit margin 30%, looks pretty good. I'm forgetting, let's go down here. Maybe, there we go. All right, so this is the world that I know Derek spends some time on, is 1388 free cash flow per share looking backwards, right? So it is very, very difficult to find a website that does forward free cash flow. But if we take Dell, if we just figure 1388, scroll all the way to the top, 50, oh God, of course it's an impossible calculation. I have to get out my calculator for this. So 58 divided by, what did I say, 13? That's 4.5 times free cash flow in the rear view mirror. The forward PE of 869. I'm going to take a look at Yahoo. Nobody has better historical metrics than Yahoo. If I can type stuff in, long ago, pre-pandemic, it was 746. Okay. Price to sales, right in line. Let's see what their analysis is. So they have EPS going up considerably next year from a consensus standpoint and about 3% growth. I mean, it's interesting. I'm sure there's a dividend in here, right? No dividend. Okay, maybe that still comes out. Maybe it's temporarily suspended. The thing that is interesting about the computer world, particularly PC world, and I'm not sure, I haven't studied Dell to know where they land in this, but not laptops, desktops. Desktop computers had a historic run in 2021, I believe mostly because of gaming. But there's still hope for the desktop because of the power that you get with it. It resonates well with gamers, but I'm sure there's several other people, data modelers, 3D kind of applications So that was surprising to me. And of course, laptops continue to do well. If any of you recall, maybe, I don't know if it's been 7, 10 years, when the iPad came out, people were like, death of the laptop, death of the desktop, phones are getting smarter, no one's going to bring a laptop anywhere anymore. And, you kind of thought it was true maybe at the time, but I can tell you as an old schooler, I mean, I would flip, I would die if I had to use an iPad as my computing device for the day. Like there's no way that I could do it. But, I'm also older, so whatever that means. And there's sure as hell no way that I could research stocks on my phone. There is like absolutely no way. Now I can click through a website on my phone, obviously, and get some information. But as far as working without any sort of tables or Excel sheets or whatever, I don't even know how you do it. But certainly there are people who do it. All right. PayPal earnings after market. Lion, I know my future depends on it. But I'm expecting decent. I'm expecting decent out of PayPal. I have no reason to think that the fourth quarter during holiday shopping was anything but good. Visa, credit card transactions were up, MasterCard, same thing, Amex, same thing. It would be very disappointing if PayPal came in short, honestly, considering what we see out of the peers who also deal in digital transactions as well as in-person transactions. The key is the guidance. I mean, you guys know this already. You've already seen it. Who cares what you did in fourth quarter already? Assuming you hit or beat, it's all what you think about 2022, and that's where PayPal has to step lightly and make sure they have their statements prepared, because you see what happens when, like Elon Musk, he had a hell of a quarter, and he came out and said, supply sucks, we're not making this car, we're not making that car, we're building a robot, and boof. Tesla 10% off right as soon as he releases those words. So we'll see what PayPal has to say. Mr. Chada is asking about a firm, not one that I personally am interested in. This is buy now, pay later. I think some of the truth about BNPL is finally coming to light, and the story isn't as bright as it was. However, there's another one. February 1st, $107. Today you're at 64. High was 168. I'm not sure when a firm goes profitable, but it's probably not anytime soon. Yeah. So I'm out, and in 2022, I am out on anyone who's not profitable. And that is my resolution to myself. Okay, now on the bright side, plus 40% revenue growth projected for quite some time. At today's price in 2023, you'd get under 10x on sales. So, that to me is that's a mental thing to get over, is to get under 10x. However you want to call it. Not saying that it matters compared to 14, but it sort of does. When you get to single digit price to sales, it's just easier to swallow. As far as, let me go down and look at some of these other metrics here. Profitability, you got momentum. I don't want momentum. I was trying to look at revisions. 7 people have pulled down revisions for this fiscal year. 0 have run up. So that doesn't mean they won't hit it, but it could be a problem if they've read something that would make them believe otherwise. And cash flow per share at 68 cents puts you're about 100x on your free cash flow. I'm not a huge free cash flow person, but it's definitely worth eyeballing. And I think 100x is pretty steep. off the top of my head. So just be careful with the firm. It could have some more weakness, would be my opinion. All right. Facebook is cheap as chips. That's funny for John Spencer. Facebook cheap as chips. Where are they running these days? PE forward of 22. And I think like the most intriguing part about Facebook, as long as you don't have any political concerns, or not political, but like, what's the word I'm looking for? What I meant by a political is just them getting banned or sued or whatever, and I can't come up with the word. Regulatory concerns. That's, it's the same thing as Alibaba. It's like this is holding the stock hostage. At a 22, I think this is lower than Google. This is the forward P for next year. Could easily get closer to a 20, if not under, if they come out and say we did better than expected. I have no problem. I don't see anything wrong with buying Facebook in this environment. You just have to ask yourself if you can handle the regulatory, the potential, right? It's going to dip. It's going to have bad weeks where Congress is up their ass. It's just the way it is. Does not mean that it'll stay there forever. Just out for fun. Let's see what their cash flow per share is. $12.62. So what's that, a 30? Nah, it's less than that. It's in the 20s. I can't do that math, but it's like 28-ish, 29. So Facebook, I don't know what the argument is against it, to be honest with you. All right. Ali, Google, yes. AMD, certainly for the long term. PayPal. So I'm in long for PayPal, but I have been, you will see that I have not come on this channel and said, I think that it's a great deal. I think that it does have the potential to go as low as 150 if its valuation multiple keeps pulling in. So I'm a huge fan. Very comfortable with my investment in it, and I'm sitting right at 190. And I thought about buying. I need 15 shares to hit 100 on PayPal, and I thought about buying at 160 or whatever. But I was like, you know what? I'm holding it. I'm going to let them go through earnings, and I don't have to buy my other 15 after earnings. If they do awesome, I can buy it anytime I want. But I want to make sure, if they have a disaster of some kind, I wanted to save those 15 shares to buy down. But so I'm not going to say PayPal's buy now. I'm really not. But I am excited for their earnings. Starbucks, just know, I don't think there's anything inherently wrong with Starbucks. Just know that their growth cycle is ending. So it's going to turn into a profit cycle here soon. I don't know how many countries they have left to expand in, but for me personally, I like to get a little more growth. And before I say that, let's see what their projections are. I don't think, la-di-da. So good EPS growth. All right, well, more than I thought. I expected single digits. I expected this below, below 10%. They got a 12% projected for this year. We'll see how it goes. International at this point is everything for them. I haven't read up on them in a long time, but you want to make sure that they still have international expansion opportunities. So, as you've seen in the United States, you can put these things on every single store corner or street corner, but you can't necessarily, do it at scale. So, hold on, I have to press this screen button because it's bugging me. So where the best place to go is to a country that has no Starbucks, right? Then you can put it on all their street corners because we're pretty much filled here in America. And I don't know what the situation is in some of the other countries. So that's what I'd be looking at for Starbucks. Lion Amazon Thursday. Amazon is on Thursday. Hopefully I'll be able to do that one live. I can't do PayPal live today, unfortunately, even though my heart would be in it. I got youth basketball practice that I coach my kids' youth basketball team. So I'm going to have to bail here in about 15 minutes. However, I think with Amazon, you can go a lot of different ways. And I'm hoping that they go up, but they could go down. Okay? And that sounds really stupid, right? Because it's the 50-50 chance. But if their EPS is not enough right now to hold them up fundamentally, unfortunately. My understanding is that world changes significantly in the back half of the year. Okay, I've said it a lot of times on this channel. However, in the short term, which is basically Q1, Q2 of this year through July 1st, they could have weaker EPS, negative comps on EPS, which of course is going to bring down, even if you're at full valuation, it's still going to bring your stock price down. I am looking ahead for Amazon. The most recent video I did, which was like a month ago, I said I do still think it's $4,000. However, you're going to have to wait till you probably get to October, November, December before analysts start believing that the EPS is back and growing. So we'll see. If it goes down a lot, what are you at? 20? Where are they at today? So we had a little bounce back. Okay, you're over 3,000 again. I mean, if you get another shot at 2,750 or something, and you have time, you have a year, two, it's, geez, I mean, you can add $1,000 a share, in my opinion. Crew, Palantir, I own it. I don't expect much. I said that I think it has a $20 cap on it until we learn more in earnings. And I don't know that I'm not saying it's going to $20. I'm saying if they hit their EPS projection of 20 cents and you put a forward P of 100, give it basically a software valuation, then okay, $20 roughly fair value in my opinion. Obviously, they've run down. The good news about Palantir is they are relentless with their press releases on every single contract they do. The catch is going to be, will they come in, estimated at February 15th, will they raise any EPS projections? Because if they're not going to buy back stock, if they're going to continue what they're doing from a float perspective, which is fine, I mean, that's the world we bought into, then they need to figure out something to pad the EPS to make a guy like me happy. We'll see if it ever happens. But I own it. I'm not selling it. And wake me up in 5 years on this one because it could take that long. But we'll see. DH, ATIP might be better than Smile Direct for a cheap. ATIP locations are all over Chicago. Take a look at it. $3. I don't. So it's hard for me because I don't know a ton about it. They don't even have a description. But we'll just take DH's word for it if it's something that you guys want to look into. It might actually be a, is it like an IPO? 2021, it came out in October. Yep. So it hasn't been on the market very long. Was $10, took a hit, trickled down to $3. So I'd have to read more. That was a SPAC, apparently. And this person, Carolina Doc, likes it, I guess. All right, thanks to each. Metaverse land grab sales top 500 million. So I'm guessing that's that sandbox game or whatever NFT world people are buying. Derek says, I don't care what happens right now. I bought the stuff I like at the prices I like. If I have to add more, I think that's fair. Or if I have to let it run while I stack cash, so be it. And I, I think we all need to have that opinion. So we talked about Palantir for a second, dropped to $13. But I kind of have like Derek's opinion on that, like for myself, right? I'm in at 20. I think I could get to 20 if it got the right multiple, but I don't really care where it is this year. I'm not expecting, I still think the company's solid. They need to do some things probably to really boost the stock, but I'm not worried about it this year. And we'll see what happens. That money is not used to pay my mortgage or anything like that. And the exact same thing goes for DraftKings for me. They bounced back a little bit, but I'm not seeing a huge run over the next 6 months, maybe next football season. But I'm letting it simmer, and it's all good to me. I'm not worried about it. And I think the more that you guys can do that on things that you're not losing your shirt on, like, how many sayings are there about long-term investing? And those are the people that win, right? If you bought it, you read about it, you liked it, and it wasn't somebody telling you to buy it, then and you went through the whole story, then keep it and see what happens. Like, we're in weird times, man. And stuff that maybe didn't work out quite as quickly as you imagined it would can turn around in 5-7 years and be a completely different animal. So if you can afford to hold on stuff you believe in, then do it. Lion, don't even mention Netflix. I'm kicking myself. Yeah, that ended up being a good deal at $360. And luckily for my mom's account, she's not back to par, but Netflix did jump back because I had just a couple shares in there because she loves Netflix and so do I, and I thought it was a good deal, and I could not believe the way people attacked that stock. We'll see. It's if you ever want to entertain yourself, if you're passionate about Netflix, or maybe you're passionately against Netflix stock, you got to fire up Twitter and type in the ticker symbol and just look at the back and forth between both sides. And the people who hate it, and of course it's Twitter, right? So the people who hate it are the loudest, and they have all these theories. I'm floored by some of the theories that come out. And so I'm not going to spoil it for you or waste the show on it, but just go check it out. Just scroll through the last 30, whenever Netflix did their earnings, last 30 days of Netflix on Twitter, Netflix stock, right? So you type in money symbol NFLX. That's how you'll see those conversations, not Netflix, whose favorite movie came out. All right. Lion, I redid the office orientation. I got the TV is in my other room that I got. So I wasn't using it. People said that it was distracting in the background, so I canned it, and then I just decided to go. I was going. This used to be the back wall over here. Now this is the back wall, so I'm going like lengthwise, I guess you would say, in the office as opposed to the width way. And on the camera, the tip was that your background should be farther away. Dude, trust me, I don't spend a lot of time on it, but it sounded like a good tip, so I decided to try it. All right, Ali, Micron. You know what, Micron, I'm not going to argue that. I like the setup for Micron. I can't tell. It just gets no love. It had a quick pop right here up to 95. I think it's a $100 stock. I think it has some great things going for it. The problem with it is that they sell basically commodity chips, right? They don't have like a brand that pushes chips like an NVIDIA. So people get down on them all the time. I think their CEO is doing a great job of maximizing profits. It's got a very fair valuation, certainly compared to historical metrics. So yeah, I'm in on Micron. I don't own it though, just to be fair, but I like the way it looks. And now that it's come back down from its recent pop, I mean, shucks, looks really good. Oh, so Derek's saying, I'm out on anyone not profitable. He's booking it down. He's going to hold me to it, and I believe it. So I do have unprofitable stocks, excuse me. So just for the record, prior to that statement, I already owned DraftKings. Magnite is not necessarily fully unprofitable, but they're hanging by a thread. So I had that. Palantir, tiny earnings. So those are the three. Those are the only three, I think, that have no like genuine gap EPS. Okay? So I owned those before I made that statement, and they are not going anywhere. FIA, can you check BGFV? Not familiar, but I will look. Oh, yeah. Is this, I can't remember if it was this or Sportsman's Warehouse, but I've seen some people really big on this stock, if it's the one I'm thinking of. And it looks like on January 13th, Big 5 jumped 6% as fiscal year 21 and fourth quarter EPS expected above the consensus. I can't tell if that means they did it. As it report. Oh, okay, so it did report. Okay, so you're past the report, which came on this date here. And it looks like you had a rundown. Now you're bouncing back up. Don't forget it's retail. All right, so if you're new to the stock market, understand that different sectors trade at different PE. So we were looking at Micron, right? It was like an 8, because chips don't trade that high unless your name's NVIDIA. And here we have forward PE of 4.6. Looks really good. I would say it looks really good. But the reason it's so low is because it's retail, which is traditionally going to be at 10 or under. And then at least right now, there's not much analyst covering this, but there is a projection to take a backward step on EPS next year, which would be actually this year. Now that I look at it more closely, December 2022, can they match or beat this? Looks to be some confusion there. So, just out of curiosity, I want to type in another retail name for you, if I can bring up Macy's. I don't know if they're going to be a good example or not. Normally, yep, oh no. So here you go. So Macy's. So here's your retail. I mean, Macy's is retail, right? So even though that's Big 5 or whatever it was at a 4, you're not going to get a ton of P multiple for retail. You're just not. I wonder what Dick's is. Oh, God. Are you going to make me type it all in? Unfortunately, I don't know what their ticker symbol is. There it is. Lucky guess. Let's look at annual. All right, so Dick's is getting a 10, which Dick's, to be fair, without knowing a ton about their business, they've probably evolved to a very significant amount of e-commerce. I know that I'm in there all the time. with sports and my kids, and I order stuff online and they send a zillion coupons. So maybe they're getting a premium for the fact that they have a lot of e-commerce. However, actually, as I stare at this, this is concerning. 28% drop in EPS if that were to happen, but that's the early speculation. And you got negative revenue growth too. Those are two things that I'm not interested in. I'm not interested in a company that has an outlook of negative in the near term. Now, this number can change significantly over the next year, right? So it's a consensus opinion that right now sits at minus 28%. I, for one, wouldn't be buying here until this started to turn around. And as the year goes on, and Dick's reports into summer and whatnot, the analysts will correct their estimates and they'll upgrade, downgrade. But this would be a killer for me. Negative growth on the EPS side. So your PE is going up, right? If you do nothing, your PE goes up. That's not good. And then on the sales side, potentially coming in short there too. So I like Dick's to spend a lot of money there. They are not showing enough positive momentum for me on the top or bottom line. All right. Lion's not a fan of Facebook as a service because of my temper. I like real-world interactions and have noticed a lot of people wouldn't act like they do on Facebook if they... absolutely. And Twitter is the worst. Facebook, I think, like, in terms of people saying things that they would never say to your face or whatever, like, I think Facebook is the... like you think you're anonymously making a political statement even though you know all your friends are looking. But Twitter is just a flat out, like a rabid, just F you right to your face. You're a terrible person. Meanwhile, my profile name is like kitty cat, right? So you'll never find me. So Twitter is the venom of social media. I will say, now that I've sold you on it, I will say that for just picking through some reading on stocks while you're sitting on the couch watching a football game or something, that it's solid. Like, I like to see other people's opinions on them. I'll say that 70% of the opinions are emotional about stocks on Twitter. But you get some guys who find some cool stuff. Like, there's some dudes that dig way into the weeds and come up with some cool nuggets. You just have to prepare yourself for the just absolute trash backlash. So it's not for everybody. That kind of stuff, like people being that way, it makes me mad too, but I'm just like, I got nothing for them. Like they're so not on my radar. If that's the way they're going to act, I don't even want to acknowledge their existence. All right. And Lang goes on basically saying Facebook taking the lead role in metaverse. I agree. No debt, low PE, and Facebook similar to all Facebook, Microsoft, Google, and I'm sure Apple I know has more debt than you would ever imagine, but Apple has a lot of debt, but I think they have a lot of cash too. But definitely the first three, they have enough cash to buy a lot of things. They could buy countries. Right? And you saw what Microsoft did buying Activision, right? And it's not even a blip. That's not fair. I think that it's like 50% of their cash would go to that, but you got to figure that it's not even really 50% because it's not like they're writing a check out of their savings account for whatever it was, 60 billion or something. Like every day Microsoft makes more money than we can even think about as individuals. So they're not going to drain the savings account to get Activision. By the time that shit closes, they'll probably have saved 60 billion. So it's almost like their delta between announcing the deal and when they have to go to closing they'll have half that money already. Sorry for the rant. All right, last time, what do you got? Tesla recalls in here, Lion? Last time Tesla announced a recall of 500,000 cars, the price increased from 1060 to 1204. When has this stock made sense? And I thought Tesla was finally going to have their day for realistic valuations, but apparently not. And I think they're getting close, man. They're getting close. I have come to the resolve that I will probably never own Tesla, particularly with what I'm building on QQQ. Like, who cares? Like, if Tesla takes over the world, fine. They'll be the #1 spot in my QQQ, and that'll be great. But 930. So they're back under $1,000. Why did we end up? So they were, they've been under $1,000 for a while. Never mind. The PE ratio, though, is really changing. It's really, really changing. They are definitely maturing. If they hit some of these numbers, like if you lopped it off and got them down to like a 750 number, then you could start to say like, hey, actually, with the pace that they're growing at, this number, 53% growth, forward P of 90, I don't think that's unfair at all. Out years get a little weirder, right? And I think that that's a person like me. I'm just not sure what the out years have to offer, particularly 2024, when the rest of the auto business comes in line and shit gets competitive. I don't know. I do think that this is a stock where the higher percentage of money has already been made on it, and the future doesn't necessarily look bad. I just don't know where it goes 3 years from now, put it that way. Now, in 10 years, if they launch the freaking Wi-Fi in space and there's robots walking everywhere, okay, fine. They probably will make more money than projected, but I don't know short term what it's got. I don't want any exposure to Tesla when the bubble pops, so will your portfolio. This is probably true. And that was Derek's point about Tesla bubble. So, all right, hey guys, it's about 3:30 on my time. I'm gonna run, but just keep your fingers crossed for me in PayPal world. We've also got AMD and I believe Google. So I don't own the latter. But it should be a great day. I'm looking forward to it. I'll definitely be checking in this week. Check in again tonight for a few stock ideas I have. Something I recorded will be posting. But thanks everybody for coming out. Hope you're doing well, and we'll see you on the next one.